Corpbiz.
Hello everyone, welcome to Corpbiz. My name is Pankaj Tyagi, and in this video we will talk about audit under Companies Act 2013. An audit is an independent form of examining any company's financial position irrespective of its size and legal structure. The audit is conducted to express an opinion thereon which helps report and determine an accurate and the fair view of company's financial position and operating result. This video throws light on the audits under Companies Act 2013. Now let's talk about the regulations around the audits under Companies Act 2013. As required for audit under Companies Act 2013, every company shall prepare a financial statement ending 31st March every year. Such financial statement must be given an accurate and fair views of company's financial affairs and comply with the accounting standard notified by the central government under Section 133 of Companies Act 2013. The company's financial statement must also be prepared in the form and format that may be laid down by the specific type of company. The financial statement required for audit under Companies Act 2013 shall include profit and loss account, or in case of non-profit organization, and income and expenditure account, balance sheet, cash flow statements, a statement for shares, a statement for changes in shares if applicable. Now let's talk about the appointments of auditors under the Companies Act 2013. To conduct an audit under the Companies Act 2013, the first auditor must be appointed by the Board of Directors within 30 days from the company's date of incorporation. Here an auditor means a chartered accountant or a firm of chartered accountant who are qualified to be the company's auditors or who have given his approval to be appointed as auditor of the company. However, if the Board of Directors fails to appoint the first directors of the company, the board shall intimate the company's members who can appoint first auditors within 90 days of such EGM. Appointment of subsequent directors. In the first annual general meeting, the auditor needs to be appointed to hold office for 5 years. However, the auditor appointment must be ratified in every subsequent annual general meeting. Now let's talk about the type of audit under the Companies Act 2013. Internal Audit under Companies Act 2013. Internal Audit is an independent service to examine companies' internal control, business practice, processes and methods. An internal audit helps ensure compliance with the various laws applicable to the companies. Secretarial Audit under Companies Act 2013. As per the Companies Act 2013, the Secretarial Audit is an audit to examine the compliances of various regulations and various other laws applicable to the company. A Secretarial Audit is audit where the company discloses an opinion as to whether the relevant systems and processes in the companies are in accordance with the size and functioning of the companies. Also, the auditors examines compliance with applicable laws, rules, regulations and guidelines. As per Section 204 Companies Act 2013, read with the Rule 9 of the Companies Appointment and Remunerations of Managerial Personnel Rules 2014 requires that all listed companies, public companies having paid up capital of 50 crores or more, any private companies serving as subsidiaries of the public companies to conduct a secretarial audit. The next is statutory audit under the Companies Act 2013. Section 143 of the Companies Act 2013 entails provisions regarding the powers of duties of the auditors. The statutory auditors shall present a report to the company shareholders on the book of accounts and financial document examined by him. A statutory audit is an audit mandated by the law that ensures that the accurate and the fair view of the book of account is presented to the regulators and public. Unlike internal audits, statutory auditors are not optional and must be performed if a company satisfies specific criteria. Statutory auditors will have to access to book of accounts and vouchers, etc. constantly, and he has authority to ask for further information from company's officials if necessary. The auditors in his report must clarify, besides other things, whether the financial statement represents an accurate and fair picture of the company's affairs as at the end of the financial years. The next is cost audit under Companies Act 2013. Cost audit is a method to verify the cost records of products or services that contain their manufacturing cost, labor cost, overhead, etc. Cost audit is a legitimate review of the accounting and records to be maintained according to the cost accounting standards. As per Section 148, subsection 3 of the Companies Act 2013, only a practicing cost accountant or a firm of cost accountant can be appointed as cost auditors and shall conduct cost audit of the company. The board of directors shall appoint the cost auditors. The cost audit shall be conducted simultaneously with audit under Section 143 of the Companies Act 2013. The remunerations of cost auditors shall be decided by the shareholders in such a manner as may be prescribed. That's all about the cost audit under Companies Act 2013. Please like, subscribe and share this video. Thank you.